So, you ever look at a financial chart and just see a mess of green and red bars? Well, we're going to change that today because these charts, they're not just dry financial tools. Think of them more like a visual language from market psychology. All right, let's get into it. And this quote right here, this is exactly what we're talking about. Our goal today, it's to learn how to read those emotional stories, the confessions of greed, fear, and indecision that are hiding in plain sight on every single chart. Okay, so before we can read a single word, right, we got to understand the bigger story. And the big story in any market is that it's driven by these really predictable cycles of human emotion. And this right here, this is the emotional roller coaster of investing. I mean, we've all been on this ride, haven't we? It kicks off with optimism as things start looking good. That builds into excitement. And then, boom, full-blown euphoria, where it feels like you just can't lose and everybody's piling in. But then, you know what happens next. The tide turns, anxiety starts to creep in. That anxiety can morph into real fear, and then, bam, outright panic, where people just dump everything at the absolute worst time. This whole cycle, driven purely by psychology, it just repeats itself over and over and over again. But what if you didn't have to get caught up in all that? What if you could see those emotions taking shape in real time? What if you could see the fear building, candle by candle, before the panic even sets in? To answer that, we've got to zoom in, like way, way in. We need to focus on the most fundamental piece of this entire language, a single candlestick. So what even is a candlestick? Well, the whole idea goes way back to the 18th century, to a Japanese rice trader named Munehisa Homa. He figured out that price was driven by emotion, and he cooked up this method to track it. So each candle gives us 4 key pieces of info: the open, the high, the low, and the close for a certain period. Really, it's just a snapshot of a battle. Okay, so let's break down that snapshot, that battle. The thick part, that's called the real body. It shows you the distance between where the price opened and where it closed. Think of this as the main front of the fight. Then you've got these thin lines, people call them wicks or shadows, and they show the highest and lowest points the price hit during that time. Those are the extremes of the battle. And finally, the color? Well, the color tells you who won. And here they are, the two sides of that fight. On one side, you've got the bulls, the buyers. They're fueled by optimism, by greed, and they're always trying to push prices higher. If a candle is green, it means the price closed higher than it opened. The bulls won that round. And on the other side, you've got the bears, the sellers. They're driven by fear, by pessimism, and they're trying to drag prices down. If the candle is red, the price closed below where it opened. The bears won that one. All right, now that we've got the basics down, let's zoom back out a little bit. Because these individual candles, these little confessions from the market, they start to string together to form patterns. And those patterns tell a much richer, much more complex story. Here's a really simple way to think about it. If a single candle is just one word, then a pattern is a full sentence. It's giving you context. It's telling you what's actually going on. So let's look at a couple of these sentences. This is a tale of 2 very different battles. On the left, we've got something called a hammer. And on the right, we have its opposite, the shooting star. They might look kind of similar, but they're telling completely opposite stories. So what's the story here? It's all in those long wicks. Let's start with the hammer. That long lower wick tells you that the sellers tried. They really tried to force the price down to a new low. But they failed. The buyers heroically charged back in and managed to close the price way back up near the top. It's a comeback story. Now the shooting star, that's the opposite tale. Here, the buyers tried to push the price to a new high, you see that with the long upper wick, but the sellers slammed the door shut and rejected that advance, showing some really powerful resistance. Okay, let's look at another really powerful pattern. This is the bullish engulfing. Just look at it. You see that big green candle? It completely swallows or engulfs the previous little red candle. This is a story of a decisive takeover by the buyers. It's not just a small win, it's a total rout. The psychology behind this is so clear. The story here is just one of overwhelming force. I mean, it's an obvious win for the buyers. Whatever pessimism existed in the previous candle, it gets completely erased, wiped out. This is a huge signal that sentiment has shifted dramatically to the upside. Some patterns tell a story over a few candles, almost like a little 3-act play. The morning star is a perfect example. So, Act 1, a big bearish candle shows that the sellers are totally in control, continuing a downtrend. Act 2, the pause, a tiny little candle shows up, signaling indecision. The bears are losing steam. And then, Act 3. Buyers take over. A strong bullish candle appears, confirming the reversal. It's a complete narrative of a trend changing right before your eyes. And let's look closer at the candle that's often at the heart of that Morningstar pattern, the doji. A doji happens when the open and close prices are pretty much identical, and it creates this sort of cross shape. Psychologically, this is a moment of perfect balance, a total stalemate. Neither the buyers nor the sellers can gain an inch. It's the purest sign of indecision you can find. Okay, we've gone over a few words, a few sentences. Now it's your turn. Let's try to put this all together. Take a good look at this chart. What's the story it's telling you? What patterns can you spot? What's the emotion here? Did you see it? This market is basically going sideways, what traders call ranging. But look closer. See those candles down at the bottom with the long lower wicks? Those are classic bullish pin bars or hammers forming right at a support level. That's buyers stepping in and saying, nope, not going any lower. And then up at the top, we're seeing the opposite. Candles with long upper wicks right at a resistance level. Those are bearish rejections where sellers are taking back control. The chart is literally telling us a story of a battle happening between these two clear boundaries. So by now, I hope you're starting to see that this isn't really about complicated technical indicators. It's more like reading human behavior. It's about getting a feel for the collective mind of the market. So let's boil it all down. What are the key confessions we're looking for? Well, a long wick or shadow always shows rejection. Price tried to go somewhere, but it failed. A long body? That shows conviction, real strength. A small body shows indecision, maybe weak momentum. And most importantly, remember that patterns aren't just random shapes. They're conversations between buyers and sellers happening over time. And this right here is probably the most important thing to remember. Candlestick analysis isn't about having a crystal ball to predict the future. It's about understanding the present emotional state of the market. It's about figuring out who is in control right now. And believe me, that alone gives you a massive, massive edge. The charts are talking. They're telling these incredible stories of fear, greed, and hesitation every single second of the day. And now you have the tools to actually listen. So what secrets will you find?